Scott, as expected, the Fed cut interest rates by 25 basis points. This is a third insurance cut this year. So is that it? Are we done here?
I think the Fed has signaled that it is done here. It's taking a pause. It was acting as an insurance, getting ahead of the markets. Now it's going to assess the data and see what comes in from here on. So 3 cuts and a pause.
So talk about economic reports. We got some news today that the U.S. GDP numbers were better than expected. We're still seeing record low U.S. unemployment. The U.S. consumer is still strong so far, but we're seeing some weakness in manufacturing. What does the Fed do going forward to sort of manage this imbalance?
Yeah, you correctly put it. Good news counterbalanced by some uncertainty, and it really comes down to the big trade issue and how that's feeding into the manufacturing, the business confidence, business investment. And that's why the uncertainty remains in the market, and the Fed is acting as appropriate as data comes in. So hopefully the Fed is looking that this is an inflection point. We're stabilizing and no more deterioration on the business investment side. So that's what they're looking for, is some lift here on that side.
And is there anything that you heard today that sort of changes your outlook going forward?
No, I think they've managed the markets very well. From early where they were acting as appropriate to now where they've stabilized the markets, they've got ahead of things, they put some monetary support behind the economy. So now I'm expecting them to be steady here and address the market uncertainty as appropriate.
And talking about market uncertainty, I think one of the headlines is, of course, U.S.-China trade. Is that something that they're concerned about?
That is the number one issue for everybody. It was the Bank of Canada today. It'll probably be Bank of Japan tonight, and the Fed today. So that is, driving all the uncertainty on business investment, business, CEO confidence. This is the number one issue that's driving the global growth weaker. And so any relief on that side or any stabilization is really what's going to be driving the global economy and monetary policy.
And finally, I just want to touch on one point. I know that we've heard a lot about negative interest rates in Europe and in other countries. What's the likelihood of the U.S. seeing negative interest rates in the future?
I think it's pretty low.
And why is that?
The Fed and the research that the San Francisco Fed put out an interesting piece and basically downplayed the effectiveness of negative rates in both Japan and Europe as a tool. So I think there's lots of tools in the Fed's toolkit that if we got to the point where they were considering negative rates, they would use other things. So I think it's a pretty low likelihood that we'll get there. Certainly, they're creative as always, central bankers, but I doubt we'll see negative rates in Canada or the U.S.
Scott, thank you very much for your time.
My pleasure.